All right, good morning. Today is June 1st, and I'm back with another edition of the Wednesday Live Show. And lots going on. We just got through Memorial Day weekend, and it's June 1st, and the market is attempting to rebound a little bit. And it's going to be interesting to see what happens from here because, as you probably know, June kicks off the June kicks off the Fed's balance sheet reduction, which is probably more important than raising interest rates. And you may have seen that Secretary Janet Yellen was on CNBC this morning. Excuse me, getting choked up on my coffee here. She acknowledged that she didn't foresee inflation getting out of hand, which seems a little ridiculous. And I saw a lot of people joking about it on the internet that, Powell and the Fed and Janet Yellen and all these people that are supposedly the experts had no idea that all the crazy stimulus was going to cause inflation, which, since the beginning of time, and quite frankly, anyone that took a basic economics class all throughout history, increasing the money supply eventually results in inflation. And so, of course, yeah, there's the supply shocks, and there was the COVID, and the Russian invasion of Ukraine and all that stuff that they're blaming it on. But quite frankly, most people, most people sort of use the Occam's razor to figure out that, hey, I can't remember what the exact statistic is, but now and then I see these statistics that say something to the effect of, half of the money supply has been created in the last, 2 years or something like that. So, I mean, it's common sense, basic economics that printing money, creating money out of thin air, and watering down the money supply is going to eventually result in inflation. And that's just, it's a monetary phenomenon. And all throughout history, it's been the same way. And so they're acting surprised about it. like, and the thing that really, the worst thing about it is supposedly, these are the people running the show. Well, the brightest minds in economics, theoretically are working at the Fed. And I mean, just everybody knew. For one thing, everybody's seen prices going up for years. When they pretended there was no inflation, prices were going up. Every time I'd go to the store, well, not every time, but you'd go to the store, and then a couple months later, the packaging got smaller or the price went up. And it's no mystery to anybody that goes grocery shopping. The price has been going up for years. And I remember back in like in 2018, before the crises, the CPI hit a multiple year high, and so inflation's been basically going on since I was born, right? I mean, everybody remembers what stuff used to cost when they were a kid, and so prices continually go up. And for the longest time there, the Fed pretended that there was no inflation when, clearly the prices on a lot of stuff were rising. And things that, anyway, I don't want to get into too much inflation talk, but um, yesterday, President Biden had Secretary Yellen and Jerome Powell in a meeting, and he claims that fighting inflation is his number one priority now. And, once they let the inflation genie out of the bottle, it's hard to put it back in. And the thing of it is that right now we're in a weird spot because in theory, I mean, inflation, the last inflation print was 8.3%, I believe, CPI print, and the one prior to that was 8.5, so it may be coming down a little bit, but the price of gas is going to have a big effect on everything. And of course, let's see. So oil is $117 a barrel, and literally like the price at the pumps is just kind of going crazy, and I think it's up to like 275 here or something. And so what that means is that consumers are going to have less money to spend on other activities because they're paying so much for gas. And of course, you guys have seen the price of gas in California and the price of diesel. And so, it's kind of it's a weird thing because until the price of gasoline, diesel fuel starts coming down and stays down, it's going to be tough for them to fight inflation because moving goods around, moving stuff around by truck is costs a lot extra money. So we're in a pretty tough spot here, and the Fed is the Fed talks a mean game about fighting inflation, and so we'll see how things pan out. Oh, regarding the balance sheet, I mean, so now we're getting into in the June meeting, they're expected to raise another 50 basis points, right? And then also the balance sheet reduction is going to definitely have some sort of effect. Now, I saw something. I wish I had saved it. And I saw something about a week ago that had all the minute details of the balance sheet reduction and when the bonds like run off and are reinvested. And from what I gathered, what I saw on that little table was that it doesn't actually balance sheet reduction doesn't start until like June 15th. That's the first day where they actually reduce their bond holdings rather than just roll them over, whatever. And I don't completely understand, all the mechanics of that. But anyway, long story short is that it's going to be interesting to see how it affects the market. Right now, as you can see from the S&P chart, we're in one of these little rallies off the low here that's very reminiscent of the rally in March that you see here. And a couple of interesting things. I don't know if you guys see this the way that I do, but look at like this little dip here in this little area, right? There was like the spike low reversal. This little area here, and then a few days, and then like another dip, and this little cup right here where my mouse is. And then come over here and look at, this little sort of spike low reversal for a few days here, kind of like this area, and then another sort of dip with and look at the white space. Anyway, it's kind of like a little double dip type thing right here that's similar. I see these patterns, and I've mentioned this before. A lot of times what I look at, or just my eyes kind of glaze over, and what I see is the white space of the cup. Like not necessarily the cup, or not necessarily the price bars I'm looking at. I'm looking at sort of the white space that looks like a cup, like where my mouse is. And so you look at like this little cup here, you look at that little cup there, and you sort of see something very similar. And so the point of it is that right now we're on this little sort of bear market rally that is kind of manifesting in a similar fashion to the March rally. And the only question now is, and you can see we're kind of struggling today. ever since I came live here on the show, the market's actually kind of went into the negative here. So I don't know. There was some economic number came out. I wasn't paying much attention, but so anyway, back to what I was saying here. We're in like this little sort of bear market rally, and we're at like kind of see these like three big up days in a row coming off the lows. Three big up days, and so look over here back in March, 1, 2, 3 big up days, and then sort of a little stall out, and then there was one little extra leg there that kind of, and we've talked about this before, that little extra 3-day rally there on top of it, I think sucked a lot of people in because, I mean, geez, here's the all-time high in the history of the world, right? Right at the end of 2021, beginning of 2022, and so there was a clear sort of 4,600 here was kind of a clear spot where, there you go. That was kind of what you call a false breakout, so just under 4,600, right? Big level of resistance over here, busted through it, and by the time, by the time it rallied for a couple of weeks up here, everyone was, well, I won't say everyone, but a lot of participants, I would say, were kind of thinking that, hey, the worst of the sell-off is probably over now, right? That's just the way people think. So it's not just a function of time, it's a function of price too. And so anyway, yeah, that was sort of a really powerful counter trend rally. And there was also, there was a trend line that got broken here too. And I'm still talking about the March rally, and just kind of comparing it to where we are now. So you had this nice rally here in March and broke that trend line, broke there's the 200-day moving average. You actually have the 50, the 100, and the 200 stacked up here on this chart to show the overhead resistance right now. I mean, there's a bunch of overhead resistance. The main trend line, as you guys know, had this on a different chart, but I figured today that I would actually have my drawing tools open here. There's the big kahuna macro downtrend line across the all-time high and across the highs of that March rally. So anyway, the big question here is, well, there's a couple big questions. I joked about this last week. Literally every time the market, rallies for a couple of days or a day off of whatever the lows are, CNBC gets all these people on and asks them, hey, is the bottom in? Have we seen the lows? Hey, this and that. And I mean, this has been going on since January, quite honestly. Back here in January, you got this big sell-off to start the year, and and people were panicking, not panicking, but the sentiment got really nasty here in January because that was a humongous sell-off, and then you got a few days of higher lows or whatever and another rally, and they're like, oh, is the worst of the sell-off over? And then the other thing here is, let me draw a line here and connect these lows. It's pretty amazing how there's a few ways of doing this. One is you could draw a parallel line to this one down here, but it's amazing to me anyway how these lines fit across these lows right here. Pretty incredible. Those are significant long range sort of spike low days, and I could see like these two, obviously you can draw a straight line between 2 points and have them connect, but it's really coincidental to me how, there we go. It's coincidental to me how this low connects so well too. Seems very unusual, but it is. So anyway, market kind of struggling here. And it struggled a little bit back here in March also. Rallied up for a few days, and then there was a few days where it kind of waffled around, and then there was one more little rally up. And of course, you got the calendar. Today's June 1st, and in theoretically, the first day of the month is typically strong because you have institutions that are putting money to work, right? I guess first day of the month or whatever. But so let's see, June is the last month of the quarter, and also we're heading into kind of what theoretically would be a dull period in the market. June, July, and August are the summer months, typically dull. Now June not so much, but July and August the market tends to be dull on a lower participation. People are on vacation, doing stuff during the summer. So we'll have to see how that plays out this year. Of course, there's a lot of macro stuff going on. So anyway, I mean, it's obviously at this point here, it could go either way. Although, just based on the macro picture, the inflation outlook, the fact that the Fed the Fed and the administration are their new mission now is to bring inflation down. And of course, there's only one way to do that, and that's a slowing economy, right? And, the big debate is whether we're going to have a recession or not. So, and quite frankly, I mean, that's what needs to happen in order for inflation to come down. They need demand destruction. And so, boy, the price of gas, I don't know. I mean, California is like a whole different world, but I know me personally, around here anyway, the psychological effect. When gas went over $4, people started talking about it, and you heard a lot more about it on the news and this and that, and it started. You start to feel like, hey, well, maybe I don't want to drive. Like if you when I lived in Ohio when I was young, we would drive to Florida every year for vacation. And now with the price of gas what it is, people may rethink that. They may think, hey, let's not drive from Ohio to or wherever to Florida for vacation because it's going to cost a fortune in gas. So anyway, and the price of food going up, people are going to cut back. So that will create some demand destruction. Although, lots of people still have discretionary money, and with the pandemic and all that stuff and, everybody not traveling, I think we're still in a period where, people still want to take vacations and enjoy themselves, but there's a lot of others. And yeah, I was commenting to someone lately about the size of the vehicles out there. I mean, everywhere I go, I drive a small car, but everywhere I go, people are driving these giant pickup trucks and big SUVs and that, and I can't even imagine what it costs to fill them up. And for people that drive long distances to work, I mean, they're definitely going to have to cut back in other areas. But the point I was getting to is that all of a sudden, I mean, the price of gas seems like it's been going up almost on every other day or every few days. It's been creeping up. And today I got a text from someone that said gas at the corners for like 4.75 or 4.79 or something. But at $5, boy, that's really going to have a big psychological effect, I think. So anyway, we need the price of oil to come down. That's going to be the number one thing for inflation, I think. Anyway, is price of gas coming down. So let's see. CNBC, mortgage demand falls to the lowest level since 2018. Yeah, I saw they had something on there about comparison of mortgages and mortgage rates and all that stuff, and that's a pretty big deal too. So mortgage rates have basically gone from around 3% close to 6%, and then when the Fed raises rates again. So that's going to be a big issue because housing affordability, which has been going down and down and down, it's going to get worse, obviously. So the fortunate people are those that locked in, really low mortgage rates, and they're probably going to stay put. So it's going to be interesting to see. But of course, we didn't learn anything from the housing bubble of 2006, 2008, because home prices continued to, I mean, over the past few years, home prices have been rising at like a ridiculous clip, which is a whole nother issue. But anyway, the economy's facing some serious headwinds. Inflation's out of control. Home prices went through the roof. And the problem is that once home prices, if home prices start to decline, then you run into all sorts of other problems. And that's basically what happened in 2008, right? Is home prices, as long as anyone can remember, they always went up, or had an upward trajectory, and people flipping houses and all that. And then so, they let it basically get out of control again, and which was fine when interest rates were, next to nothing. And so, interest rates at zero for all these years, or, just a couple of percent. I mean, nominal interest rates, but raising interest rate. And so, anyway, this whole inflation problem was, in my opinion, the whole thing was easy to foresee, and it's literally completely the Fed's fault. Completely for horrible monetary policy. So I don't need to go that much further into it, but it is what it is. So, the stock market and the economy are not 100% correlated, right? The macro environment doesn't necessarily correlate to what the market's going to do on any given day, obviously, because all these problems, that I just described haven't changed in the last couple of days, even though the market rallied off this low. So, looking at, this chart completely objectively, which is the best thing to do, and that's what charts are for. And there's a lot of recently, a lot of people come out and say, "Oh, technical analysis, this and that's getting a worse rap than it used to." But there's certain things about technical analysis. For one thing, you're looking at it objectively, right? Like I can't, without looking at a chart of a stock, I can't tell anything about it. Like, just can't tell anything about it because, as you know, when the market makes a big move in one direction or the other, most stocks tend to go with it. And so, regardless of the individual fundamentals, and especially with this market sell-off that we've seen since the beginning of the year, a lot of stocks, are down way more than the market significantly. But it's there's only a handful those stocks that have kind of bucked the trend, and those are in the energy and material sector. I mean, that's been where, the one sort of bright spot in the whole market. Anyway, what I was getting at here is you can see all these levels of overhead resistance. So if the market does decide that it's going to continue to rally, right, and, it potentially could. It potentially could, we could get maybe a little bit of a consolidation pullback. We could see a continuation of this rally, but you got this 50-day moving average that's sloping down, and there's some pretty good overhead resistance. You got the 100-day, and then you got the 200-day, and then you got this. I'd really be surprised to see this thing rally up to here, right? There's a pretty big level of resistance right around this area here, like those couple of highs right there, obviously seem like pretty big levels of resistance. Now, it kind of reminds me a little bit of this, right? And so the market managed to rally one day past that resistance, which was the big fake out. But so now we've got a similar sort of resistance point here, and so that's something to keep an eye on. If over the next, well, geez, today's already Wednesday. Yesterday felt like Monday. Today's Wednesday. So, but, over the next week or so, like going into next week, if the market is able to get a continuation of this rally, kind of like it did over here, um, watch that resistance point and keep in mind that all these moving averages, the way that they're stacked too, the 50-day is below the 100-day, and the 100-day is below the 200-day, and you're below this. So, um, and so anyway, the market's got a lot to a lot to prove here. And of course, that low down there is that's a pretty significant low, right? Anything, I believe, like bear market territories, like somewhere down here, right? That's a little ways down, but intraday on that spike low day, uh, the S&P actually got into minus 20% territory, which is down there near the lows. So, yeah, there's a lot to worry about here. Okay, so we have a new open trade, right? When this first hit the pending list, I believe the entry was up there, right? And it moved down a little bit. So, but basically, here we are. So, and this is a nice pattern theoretically, right? Now, this is kind of a low volume ETN. It's price of coffee, basically. It's supposed to track the price of coffee, and really nice uptrend. First leg down around that 200-day and a bounce, and then a little bit lower low, and then it's coming back. And so you basically have the classic W pattern right here. And so there you go. This W pattern, I mean, you can see a couple of spots on here. W pattern. There's nothing really on here that looks identical as far as something, we can go back in the past, but what we can see is really nice persistent uptrend since the beginning of 2021, and a little bit of a pullback here, and so there you go. So you got the little bit extra that the trigger price came down is kind of nominal in the big scheme of things, right? Doesn't really make a whole lot of difference. It didn't come down drastically, although it would have been nice. But it would have basically, there's like the top of the W, there's like a spot. So I mean, basically, regardless of, it would have triggered in yesterday too. And so now we're basically looking for a move back towards these highs. And so, man, this thing, it's been a while. It's been pending for a while. Of course, the market, we just looked at the market, and it's been a pretty rough market since the beginning of the year. So let's take a look at see how these other pending stocks are doing here. Yeah, U.S. Steel. I mean, it's kind of shaping up a little bit. You can see it's like sort of trapped right under this 200-day moving average, and obviously these moving averages are kind of, well, the 50 days way up here, but this is a relatively decent sort of, there's some relatively decent potential here for a cup to form and for it to swing back up. You can see there's a big sell-off here, bottomed out, and so again, let me see if I can. Let me just find a chart here without any. Oh, that one's got moving averages on it. There we go. All right, so yeah, sometimes I like to look at these charts without a whole bunch of indicators or moving averages or whatever, just to get an idea. Just to get an idea of the pattern. I can visualize the pattern better if I don't have a lot of stuff on the chart. So these steep trend lines like this, I mean, that's not, the steeper the trend line, the less reliable it is. And so I wouldn't put much in the downtrend being broken. The most important thing here is that it's been moving sideways for a period of time, rallied up, and now it's coming in a little bit. So there's let's see, there's another steel stock that I kind of like here. Um, it's a little bit different. It had a little shallower of a pullback, and then it started to cup up. Long as we're looking through some of these, I want to look at some of these material stocks. FCX, that's got a pretty good look to it too. You can see sold off pretty sharp. It's kind of in the midst of a bounce. Some of these may come in a little bit, but this has actually got a pretty good look to it too. Now, this is not a pending stock, although theoretically it's just a decent potential setup. So a lot of these commodity type stocks, and of course the energy stocks. The energy stocks have just been on a tear. I got a few of them on my watch list here. Um, Waiting for this. This is just a good example. Yesterday was a weird day in energy because you had most of the oil stocks had a big gap up and then what would look like the topping sort of pattern. But anyway, these seem to be most of the oil stocks seem to be setting up for potential trades. The problem, and I described this past couple weeks, and this is a good example. The problem is that these last little pullbacks in most of these energy stocks weren't really decent swing trade setups. They were more like, real quick, fast shakeouts and then reversals, and so they just didn't set up. A lot of them didn't have deep enough pullbacks. They didn't. Let's see, here's another one, CLR. Yeah, a lot of these, and it's just a real quick sell-off. This one, geez, one day, right? Just a real quick, shallow sell-off, and then a resumption of the uptrend. And so they didn't really have, they just didn't have swing trade setups. Although theoretically, let me see if I can find. Yeah, here's a couple more on my watch list. NBR. That was actually, kind of a decent setup, I suppose. It wasn't like, some of these sell-offs that we've had in the energy stocks, like back over here last year. Much better sort of swing trade setup than some of these real ugly, quick sell-offs and then just, turnarounds. And then, of course, some of them haven't had any sort of, nothing but just a real quick sell off and then turn right back around. So anyway, my point was these were not swing trade setups. Now this one theoretically could sort of qualify. It was a little sloppy down here, but it'll be interesting to see if these energy stocks just continue to rally or if we get a sell-off in them. So yesterday's sort of after a big run-up, you get that gap up and then a sell-off, and that typically marks, a short-term high. But of course, everything's going to be based on the price of energy and what it does. So we'll have to see. So we looked at X, and that's another pending trade. And then there's one more material stock that's got a really nice looking setup here, right? I mean, it's taken its sweet time on this consolidation, but this is exactly what you want to see. So you can look on the inside to see what the exact trigger price is. On something like this, I mean, there's a couple ways to look at it. Theoretically, right about there, starts moving above there, you got a pretty good chance at, a rally. And so, and of course, the trigger price, typically they'll start off really high and then come down a little bit. And so that 50 days sort of coming down, but that's kind of what I'd look for in a decent swing trade setup. So there's a lot of potential here, right? Now sometimes they double dip. Sometimes the first sell off and the first low doesn't hold. I would guess that this is a pretty good low right here, right? I mean that's a pretty solid low, and so it may take some time consolidating here, around $40 or just under it, but we start to get some momentum to the upside here, this is going to look really good. So, and of course, there's some other material stocks that have decent looks to them. We looked at a few of them. Oh, whoops. What am I doing here? Yeah, so when I draw on these charts, this is one that on my watch list that's kind of, man, this thing. Well, it says specialty chemicals, but this has always been a material stock, so that's kind of one it's starting to come in a little bit too. So some of these stocks that have been actually bucking the trend and doing really well may be due for a little pause here. So we might see some rotation. Quite frankly, we've seen a little bit of hints of rotation now and then. We've seen some of the you guys know I use ARK as sort of a proxy for momentum stocks. When the market had that 3-day rally, we saw ARK kind of rally too. And percentage-wise, I mean, these were significant. That's another thing. When these stocks have come down so much that on a day-to-day basis, there's a lot of former momentum tech stocks that you have like a couple day rally and it's double-digit percentages, and while that seems exciting, you got to keep it in perspective. So. Yeah, this is basically obviously a good proxy for those kind of stocks. And I'm going to go out on a limb and say, I looked through charts of a bunch of former momentum stocks. I'm going to go out on a limb and say that there's going to be a lot of them that literally never, ever go back to their highs, like whatever the high was. And, sort of just like like I was saying last week, the dot-com days, right? You'll get these little rallies here and there, but it just reminds me of the dot-com. Now Zoom had a great quarter, right? They just came out with earnings, had a great quarter. The percentage moves were significant, but I'm going to say, and I'm not picking on this one. I mean, hey, maybe this one works out or whatever, but just like the dot-com days, there's going to be a whole host of these like SPACs. You've heard a lot of SPACs. There's a bunch of SPACs. There was just an IPO frenzy over the last couple of years, and a lot of garbage companies went public, and and I'm just going to say that a lot of them are never going to return to their former glory. That's just the way that these kind of booms and busts, and so it reminded me of the dot-com days, and there's a lot of pitfalls out there. You got to be really careful, and so times are a little bit different now, and so now that the Fed is reining in their stimulus, sometimes I like to refer to these charts as like a mountain, right? And so it seems like we've crossed the summit. So, hey, you never know. I mean, things could change. Never say never, because a lot of times we've seen rough markets, and then in the fall, everybody gets back from summer in that. The market. And speaking of which, right now we're entering a seasonally weak period of time too. So keep that in mind, right? June, July, August, seasonally weak. And then of course things, tend to pick up again in the fall. So keep that in mind. There'll probably still be, opportunities here and there. There's always opportunities for, quick trades in that, and there'll be some swing trade setups, but it's been a really super tough environment since the beginning of the year, as you can see, and hey, a lot of people get excited when you get what you call a bear market rally. And so, be really careful and don't get sucked into the idea. I mean, if you just look at resistance levels and the trend lines I had drawn and all that, you realize that this market's got a tough way to go here. So, and quite frankly, I mean, we got a pretty big sell-off going on right now compared to we've just basically given up like a week's worth of gains in the market, and I'm not really even sure what that's about because I've been doing the show instead of being tuned in, but we'll have to see. So anyway, we have an open trade finally, and I suppose that's a positive. Remains to be seen, and then hopefully we'll see some other setups manifest here shortly. And with that, I will leave you, and I will see you back here next week.